it looks like we have all our panelists here, so I can welcome you properly to our webinar covering buying property in France post-Brexit, sponsored by Blevins Franks. My name is Karen Tate. For the past 20 years, I've been editing French property news and attending our French property exhibitions. I'm joined today by our French property experts, Peter Wakelin of Blevins Franks, Fabienne Atkin of Ashton's Legal, and Joanna Leggett of Leggett Immobilier. We'll start with a little bit of information from each of them about what they do, and then we'll get stuck into some of the many questions you've already submitted. You'll also be able to submit questions while we're live. Apologies if we don't get around to answering all your questions during the seminar, but you can get in touch with us via email afterwards. We'll also have a couple of polls running during the webinar for you to take part in if you wish. And the webinar will be recorded and sent to you via email afterwards in case you miss anything or want to view it again. So over to Peter.
Well, good afternoon, everybody. Thank you, Karen, for the introduction. As I say, Peter Wakelin, I'm the partner advisor for Blevins Franks, based in the office in Bergerac. I've been providing strategic financial planning advice since 2007, when I became permanently resident myself. So it's been some time now. Just a very brief thing about what is strategic financial planning, and it is brief, in as much as it's two main core lines. And I think the first one is about tax efficiency and keeping taxes as low as possible from a French perspective for those that are resident. And equally, it's about wealth preservation in as much as the inheritance, because they're completely different to what people are familiar with in the UK, and as much about keeping the eventual inheritance tax to a minimum for the heirs. And I think that's really the two key parts to it.
Great, thank you, Peter. And Fabienne?
Hello, good afternoon all. So I'm Fabienne Atkin. I'm a French national and an English qualified solicitor. I have practiced as a solicitor in the UK for over 10 years now, and joined Heslop & Platt, French law specialists, in 2016. So Heslop & Platt and Ashton's Legal merged in about 18 months ago. So I am now part of the same Ashton's Legal team. We are one of the largest teams within the UK providers of French legal services, and we advise clients on a wide range of French matters, including French property law, French property transaction, French inheritance tax law, and probate. So I'm personally based in the office in Leeds, West Yorkshire, but we also have offices in East Anglia, so we cover the whole of the UK. Thank you.
Thank you, Fabienne. And Joanna? I think.
Turn myself on, sorry. Hello, everyone. I'm Joanna Leggett, so I'm part of Leggett Immobilier. That is a family business. We've been running now for 22 years. We started as a small office in the Dordogne, where our head office is still based. But now we cover nearly every area of France. So we have agents all over France, all living and working in France, that can help you with advice on moving to France, getting children into schools, etc., that type of thing, holiday homes, and we can advise you on the areas, the best places to buy, etc. So we're really here as a hand-holding service to get you settled either in your holiday home or into your new life in France.
Lovely, thank you, Joanna. So let's start with a general topic. We've received quite a few questions about the actual process of buying property in France. So Joanna, do you want to give a quick overview from viewing a property through to completion, how long it takes, and has any part of the process been affected by Brexit?
Well, I'll answer it in the straightforward way that we would, from our agency. If there's any more technical questions, I'm sure Fabienne, from a legal point of view, might be able to help. But generally speaking, it hasn't changed at all. The buying process is exactly the same if you were a European or a non-European. The same sales process happens. So you basically find the property that you would like to purchase. You make an offer that's negotiated with the vendor through your agent agent, or even if you were buying privately. Once that offer has been accepted, then the compromis de vente is drawn up. You can, if you're not in the country and you're doing a virtual visit, you can sign a letter that's known as a promise to achat, which isn't necessarily legally binding, but it shows the vendor that you are serious about buying the property. Then the compromis de vente is drawn up. That can take a few days, depending on how much paperwork the agent already has for the property. Once that has been signed by the vendor, it's by the buyer, who has to sign first, and then the vendor, then there's a 10-day cooling off period. We can put suspensive clauses into the contract. So if you're looking at getting a mortgage, or you want planning permission or a CU to change a building from a barn into a house, all of those can be put in as suspensive clauses. You have a 10-day cooling off period after the compromise has been signed by both parties. On the 10th day, if you're still willing to go ahead with the property, even though you may have suspensive clauses, you need to send your 10% deposit to the notaire, who will hold that until completion. Then over the next few months, the notaire makes all the searches with regards to the property. You know, nothing's going to be built in the area, all the usual searches. The mortgage application is going through if you're looking at getting a mortgage, planning is being looked at, all of those type of things. And then usually within sort of 3 to 4 months, it's ready to be signed. And then usually in non-pandemic times, both parties would be at the notairs and sign together. However, the way properties have been bought in the last 2 years has changed quite a bit with the pandemic. So there is a lot of DocuSign where you can sign online and proxy, so you can sign without actually physically having to be there. But it's a very, very straightforward process. The vendor can't pull out from the sale once they've signed, so they're locked in. They don't have a 10-day cooling off period. If they were to pull out from the sale, they would be liable for 10% of the value of the property, so they wouldn't be able to sell it without paying that 10%. And the same for the client, you know, the buyer. If you decided 3 months down the line you just don't want the property, you could lose your deposit. So this is straightforward, very, very straightforward, and it's quite a safe process, you know, buying properties in France, I would say.
Great, thank you, Joanna. I think one of the key points to take away from that as well for British buyers is that you're locked into that contract early on, so it can't be gazumped. So it is a very safe, protected way to buy a property. And it's very regulated in France. Estate agents are regulated, so you can have quite a lot of confidence in the buying process, I would say. And it's good to know it's not being affected by Brexit. Nothing changes in terms of just buying the property. So Peter, the B word, Brexit, are there any new additional taxes people should be aware of post-Brexit? Any tax implications, for example, UK residents owning a second home in France, or any new reciprocal arrangements between the UK and France?
In much the way that Joanna was just mentioning about the buying process being largely unchanged, taxes are largely unchanged as a result of Brexit in equally the same way. And that's largely because all taxes are driven by local tax rules and then the conjunction of the double tax treaty, both of which never formed part of whatever was occurring with Brexit. What is probably new for those people who are buying perhaps secondary property in your particular question in mind, of course, is as a non-resident, it's always going to be deemed to be secondary property. And the implication from a taxation point will be around if they were then looking at wanting to sell it at a future date in respect to it becoming liable for capital gains tax rules. Importantly, in both countries, because the property is situated in France, France would always have the liability benefit of capital gains tax on it under French rules. We've also then having to declare it in the UK, with any taxes that have been paid in France being used as an offset credit against any UK capital gains tax liability applicable. So that's exactly the same as it's always been and unchanged, but it's just be aware of for those people who are new secondary owners that is something to be aware of for the future.
Okay, great. Thank you, Peter. People are always interested to hear more about the way inheritance laws work in France, passing on your French property. So one for Fabienne. do French property owners need to write a separate UK and French will? And are there any post-Brexit implications for inheritance?
So I guess the starting point, what I need to stress is that provided that the English will is validly executed, it can be applied to French assets in France. The difficulty that we have got with typical English wills is more the content of the will itself. There are various provisions in typical English wills that can have drastic tax consequences in France. For instance, trusts are not well regarded in France, and it is not advisable to put a French property within a trust. The appointment of third-party executors is another illustration. It can lead to drastic tax consequences. So that is the reason why it is often preferable to have a separate will for the French assets in a simpler format without these provisions. One of the advantages of having a French will as well is that the notaire who will deal with the succession of the French property on your death, or of all your assets if you are French resident on your death, will be more familiar with a French will, with the format of a French will. So that might also facilitate the succession formalities on your death. Now, in terms of post-Brexit implications for inheritance, I would like to make a distinction between inheritance law and inheritance tax. So first of all, French inheritance tax will be applicable on the French property or on the whole of your assets if you die French resident in France. Now, if you are going to have to pay inheritance tax in the UK, there's a treaty between France and the UK that is in place that will deal with the double imposition, and then you will benefit from a credit and determine also which country will in which country you will have to pay French inheritance tax. So that treaty existed well before the UK became part of the EU. So the fact that the UK has now left the EU has got no incidence whatsoever on the tax implications in terms of French and UK inheritance tax. In terms of the inheritance law, the applicable law of your succession, the French notaire will look at the EU succession regulation in order to determine which law applies to your succession. And again, Brexit has no implication on that because the UK never signed up to the EU succession regulation, but France did. So the fact that the UK has now left the EU has got no incidence. And in fact, it just clarifies that the UK is a third state in light of the EU succession regulation. So it does bring clarity on that.
Thank you, Fabienne. Joanna, in light of the pandemic, obviously a lot of people, haven't been able to travel to France. And even now, when we are able to start traveling to France, understandably, some people are still not completely comfortable about traveling. So we've had a few questions about buying remotely, which you touched on a little bit earlier. But what do virtual viewings actually involve? And are you finding people are buying remotely without actually seeing a property in person? And can, for example, somebody do a virtual viewing, have an offer accepted, but subject to a satisfactory viewing in person? I think you might still be on mute, Joanna.
Yeah, sorry, keep doing that. Yeah, realistically, we've been doing a huge amount of virtual viewings and virtual sales. We actually used to do it before the pandemic with clients, for example, coming from Australia, where it's a 24-hour journey. So we did them a little bit in the past, but there's been so many sales now that have been made virtually. The way that generally happens is you know, the agent would go out to the property that you are really interested in viewing. We would either make a video and send that to you, or we could do live WhatsApp viewing. So while we're online, you can ask the questions, we can walk around the room. Where we've got videos already taken, we can send the videos. However, it's very unlikely that a vendor would wait for you to come and see the property at the moment, because the market is so strong. I mean, there was over 1 million sales in France last year, which is probably the strongest market we've had in a few years. Properties are selling very, very quickly. The French market is, you know, everybody's looking for secondary homes or moving to the countryside. So there's a lot of movement in France, and vendors just won't be prepared to wait. Very, very rarely will they say, yes, we'll wait, because, you know, how long is a piece of string? When is that person going to be able to travel? If it was a case of we physically can't get there for 2 weeks, but we've seen the virtual viewing and we want to put an offer in, then yes, of course, I'm sure the vendor would be quite happy to wait. But the way the market is at the moment, they're not going to wait for months and months for somebody to come and make their mind up on an actual viewing. Saying that, though, this, you know, the system is very, very safe. As you were mentioning earlier, you know, agents in France are regulated, and there's very, very strict guidelines for agencies. So, you know, everything you can ask at the time on the virtual viewing. We've had loads and loads of very, very happy customers that have bought virtually and haven't even visited the property yet, even though they bought it. So they're hoping to get across sort of end of May, June. But it is still quite a safe procedure. It does save time if you can't get here. And it's not just the buyers or the British coming over. Some of the French vendors are quite worried about Brits coming over, you know, or you know, it's particularly older people, they're worried about people coming in. So we have to, as an agency, follow very, very strict guidelines. The vendors aren't allowed to be present in the house. They have to leave the house at least 2 hours in advance. Everything has to be open, all the doors have to be open, so nobody's touching anything at any stage. Everybody has to wear masks and hand gel. Clients can't come in the car with the agent. We can meet at the property or follow the agent. So there are very, very strict guidelines in place, and I'm sure that's probably going to continue until, you know, the good part of this year anyway. But it's definitely possible to do a virtual viewing, and we have been doing loads of them. So, you know, if anybody's worried, we've got lots of testimonials, or, you know, clients can speak to other clients that have gone through that process and let them know, you know, how happy they have been with that.
Great, thanks. So, I mean, the virtual viewings have sort of been born out of necessity, but it could save people a lot of time and money, perhaps in future. Do you think there'll be a more of a permanent thing? So, for example, somebody might, instead of coming over and viewing 10, 20 properties, they might view them online first and do a virtual viewing with the agent, and then just come over with their shortlist. Do you think that might be more?
Yeah, I think so. And I think, you know, for us as an agency and other agencies, we are trying to make the experience online, you know, much more virtual. You know, in the past, you may have 10 to 20 photographs and that's it. But, you know, most of our properties now will have a virtual tour. So you can virtually look at the ceiling, the floors, look for cracks, look for anything on a virtual visit. We try to make as many videos as we can now, which is much more, you know, real than just a photograph. So you can see all angles of the room. So we do 3D on a lot of our properties now. We're doing 3D doll's house view plans, so you can actually see how the rooms are laid out and what it looks like. So, you know, going from the old days where you might have details and a few photographs, things have really moved on, which does help, because from a client's point of view, you can really narrow down which properties you want to see and which ones you don't. It's always worth visiting, though, you know, if you can, mainly just for the location and the area and whether you like the village and whether you like the boulangerie and stuff like that. But again, on the virtual viewings that we've been doing that, you know, if the client is really serious about the property, the agents have been going to the local village and saying, well, this is your local boulangerie, this is the local shop, you know, this is the area, this is what you can see around you, even doing drive-bys and things. So it's definitely changing the way people are buying properties these days.
Great, so maybe a little silver lining out of all this.
Yeah.
Peter, a tax question now. We've been asked, if you move to France and are in receipt of a French pension, what is the tax position? And again, has it changed since Brexit?
And again, it's all about the tax treaty rules and things. So largely speaking, nothing's really changed. The key point there is, again, two aspects on it. If they become moving to France and they're deemed to be permanently resident, by definition, they're going to be moving into a property that then is their main and principal residence, and therefore is at any point, whilst it retains that position, exempt from liability to capital gains tax rules. And of course, if they're French resident and in receipt of a French pension, be it a French pension or any other pension, to be fair, it becomes declarable always on a French tax return for tax purposes. Position changes slightly if it suddenly is a secondary property that they've purchased and they perhaps stay resident in the UK. And then we've got back to the same questions about the property then becoming capital gains tax rules. And if the pension then is subject to the double tax treaty. And it depends upon what the nature of the pension might be at that point if they're in the UK. Most pensions, generally speaking, are taxable in the country where the person is resident. The one general exception to that rule is if it's a sort of government deemed occupational type scheme, where if it was a French sort of fonctionnaire civil service pension, for example, that would always remain liable for tax in France, irrespective of where the individual was living. Still declarable in the UK, but then benefiting a tax credit because it remained liable for tax in France, but only that particular pension. All other pensions would remain liable for tax declaration in the country where they're resident.
So just checking if my sound is back on. Can anyone hear me? Yes, you can hear me. Okay. Apologies, everybody. My mic keeps dipping in and out. So if we return to where we were, and if this happens again, I shall keep trying. Apologies to everyone listening in. I shall keep trying to fix it. If it happens again, we'll carry on without me answering the questions. So Fabienne, I think I'd asked you, had you covered the bit about the compromis de vente, or are you covering that now?
Yes, I'm happy to cover that now if you want.
So the question was, is it better to sign a compromis de vente or a promesse de vente?
So I guess I need to explain both contracts. Both contracts can be used when you buy a property in France, and increasingly we see notaires using the promesse de vente. So the promesse unilatérale de vente is, as the name says it, a unilateral promise made by the seller to offer the property to the buyer for a certain, for the duration of the promise. So during that duration of the promise, the seller cannot sell the property to anybody else. And then in exchange, the seller pays an indemnity d'immobilisation, to take the property off the market. And that indemnity is 10% of the purchase price. A compromis de vente, by contrast, when the parties sign it, creates a commitment on both parties. So both buyers and sellers agree to buy and sell the property within a few months at an agreed price and under certain conditions. And that is the difference that has got an impact on how the buyer, on the consequences if the buyer decides to withdraw from the purchase when the contract has already been signed and when the buyer is already out of his cooling off period. So if a promesse de vente was signed and the buyer decides to pull out, then the consequences are that the buyer will lose the 10% indemnity and the seller will be free to sell the property to anybody else without any further notice or any further formalities. By contrast, if it is a compromis de vente, and then the buyer refuses to complete by the agreed target date for completion, then that entitles the buyer, the seller, to put the buyer on notice to complete, and if there's any disagreement that could lead to court actions as well. So in a sense, that's the reason why signing a promesse de vente is preferable, especially if you are a buyer, because the consequences if you decide to withdraw are quite clear, and also there is less scope for court actions, and the seller would not be able to force the sale on you.
So one of the things that's changed, you can all hear me okay now, can you? I'm just double checking. Apologies, everyone. One of the things that's changed since Brexit is the length of time you can spend in France. You can stay visa-free for up to 180 days a year, but you can only spend 3 months at a time, and then you need to leave a 3-month gap. This is fine for most people with a holiday home who won't want to spend more than 3 months anyway at a time. But some people obviously would like to spend 6 months of a year at a time at the holiday home. If that's the case, you have to apply for a long stay visa. So there are ways of getting around this. So Joanna, do you want to run through the visa process? And there aren't any other ways to get around the 90-day rule, are there?
No, not really. I mean, it's still fairly new for all of us because obviously this only came into force in January, and then you weren't actually able to apply for visas because they put them on hold because of COVID and the travel restrictions. So there's been a lot of issues around them. Most people that buy a holiday home, if it's a holiday home, as you say, aren't going to be spending three months, more than 3 months there, I would imagine. I mean, I know I didn't get 3 months holiday when I was employed in the UK. So, you probably get your 25 days a year. However, there are a lot of people that might be semi-retired. And, I even have friends here that like spending 6 months here and 6 months in the UK. So you can apply, particularly if you own a property here, you can apply for a longer stay visa as a holiday tourist or an owner in France. However, you do have to be careful because once you go over that 183 days, you actually become a tax fiscal residence in France, and then you're actually considered as a tax or a resident in France, and then you would have to apply for residency if you're going over that amount of time. So again, there's lots of information online. In fact, I was looking this up yesterday. There's so many different types of visas that you can apply for if you're coming as a student, if you're coming to work on a temporary contract, etc., etc. And one site I found that was very good was called welcometofrance.com, and it explains there was about 10 to 12 different visas on there that you can have a look at. But the best thing to do would be to speak to your local embassy, because whatever happens, you do need to go to the consulate first. You can apply online, and then you have to go and have fingerprints, etc., taken if you are applying for a longer term visa than the 3 months that you are allowed. I mean, again, it's not going to be a problem. I wouldn't worry about that. As I said before, we have Americans and Australians that are very big clients for France. They love France, and they have been applying for visas, way before Europe, as they're not part of Europe. So although it's a little bit of a pain now, obviously, because you've got to do that if you want to stay longer than 3 months, but it's not difficult. But it's just to be careful that you don't then become a French resident, and then if you are becoming a French resident, you've got to apply for residency as well.
Okay, so it's all a matter of following a process which is clearly set out online. We do have an article on our own website, completefrance.com, as well, covering the different types of visas and the most common ones you're likely to need. Peter, are there any obstacles to applying for a long stay visa? Anything that people should bear in mind?
Well, most of the application process for most of the visas we were just mentioning there are pretty similar in terms of the requirements of documentation, passports, photographs, birth certificates, marriage certificates, and alike. The key issues that perhaps might be obstacles for certain people is a requirement around 2 areas. One being there's a need to show ability for financial resources for the period that you're intending, i.e. for a short term, at least for a year, or more permanent residents looking for a longer term one. Again, it's therefore looking at for the long term. The starting point and it is around then this income showing and what's needed. And in general terms, they're using something called the average earnings, and the French use the word SMIC, and that's what it's normally commonly referred to. They work it out and take into account net of social charges, and the actual value that they have to be seen as part of that now is around 1,200 euros a month for a couple. So that's, for certain people, it's a means of ways of looking at it. Importantly, it can, how they come to calculate and what can make up that figure is all sorts of sources, from be it pension income, it can include rental incomes, investment returns. So it is quite broad in terms of how they can get to that calculation to count that figure. So in most instances, it shouldn't cause too much of a problem, we think. The other obstacle, and this may be for certain people more of an obstacle than the income, and that is a requirement in the sense of the word of having to look at arranging full private medical insurance. And I think the word there is full private medical insurance. And because it's so early yet, the process is, of course, lots of clients who might be wanting to actually come on an extended visa or a long-term permanent visa is what sort of medical cover can they gain? Lots of people may have preconditioned illnesses that may have exclusions. Will the French then look at that as not having full private medical insurance? And of course, it's not cheap either. So it is something to be considered as part of a potential obstacle going forward. And that's actually true, whether you're looking at it short-term holiday makers being an extended longer than, the usual 3 months period, there is going to be that need for private medical insurance as a must, be it long-term visa or permanent long stay, permanent residency.
Okay, great. So a lot of people worried about whether they could still move to France. Clearly, you can still move to France. You just have to formalize it a little more with the visa and then applying for residency. And so how long, a few people have asked the question, how long can you actually stay in France before you become tax resident and need to formally apply for residency rather than just the visa? And Peter, do you have any advice regarding the pros and cons of selecting a base to move over and to apply for residency? For example, moving across with savings, or moving across as a self-employed or employed person, or as the spouse of an EU citizen?
Well, I think, so Joanna mentioned it not so long ago with regards this days number of 183 days. And clearly, if you're only ever visiting the UK and France, that's logical because therefore it is only 2 countries you're dealing with. But the actual rules determining it are actually governed by what's stated in the double tax treaties. And the actual double tax treaties actually physically don't state days at all. What it states is where you spend more time than any other place on a regular basis. Because it could very well be that for lots of clients and people listening is that they may have a house in the UK, they may be looking at having a house or already have a house in France, but they also might then go and spend 3 months in New Zealand visiting family members and things. So at that point, then it could be quite conceivable that they don't spend 183 days in any country. And that's the reason why it's about this period of where you spend more time. Now, it therefore becomes perhaps quite complicated for people and an important feature to almost have to keep count, because what you don't want to be doing is actually being forced to be deemed something inadvertently when you haven't made plans to do so as a starting point. The second part of your question with regards pros and cons of looking at it in different ways. Clearly, the financial resources portion we were just talking a little earlier is about the standard normal application process covering all the things. And in most cases, provided all the requirements are covered as parts of the application, it shouldn't form too much of a problem. Looking at the pros and cons with regards, if you're looking at either coming to work in France or be it on whatever basis, there is different requirements going to be looked at, and it can be slightly more complicated in terms of providing the evidence as to how that's going to be created in order to cover the financial requirements, at least early parts of the requirements for the application. So all we will say is that there is possibilities that that is not so straightforward, and it might actually mean that you need to take more professional advice with regards an application process to ensure that you are going to get where you want to be by having all the necessary resources available in order to cover things. Just a point on that, because again, there's been so many things, and other people have indicated it as well. Blevins Franks has just recently introduced a new immigration service fact sheet, and it might, have a look at the Blevins Franks website, blevinsfranks.com, go to the French site, their page. There's some fact sheets in there giving some basic background information on this, on the immigration rights. It does have other, downloads for other things as well with tax guides. So it's another source to consider to look at for information. As regards the last one, again, it goes back to the talking about, coming to France on the back of a spouse who was already available to do, be it, they might be Irish or Dutch or something, and therefore still retain the rights. For them, it's a fairly straightforward process because they have an automatic right, if they're a married couple, for their other partner to join and come with that person who automatically still retains rights of freedom of movement. So that is a fairly straightforward, simple process if that's the case.
Great, lovely, thanks very much. Fabienne, we've had a question about selling French property. So have there been any changes to that process since Brexit?
Yes, indeed. Brexit has changed the treatment of British residents in terms of French capital gains tax. So if you are a British resident and selling a French second home, then the social charges element of the capital gains tax has increased, and from 7.5%, it increased to 17.2% for non-residents. That means that if you are selling a second home in France and you make a gain on that sale, then your overall capital gains tax liability in France increases from 26.5 to 36.2. Obviously, it wouldn't apply to British citizens who are already French resident and selling their main residence. Another aspect to bear in mind is, as a non-EU resident, there is a requirement to appoint a fiscal agent in France to represent you and to make the declarations for you on selling your property in France. If the sale price is more than 150,000 euros. So that's something else to take into account if you are selling a second property in France. And there will be the fiscal agent fee as an additional cost, and that can be around 0.7 to 1% of the sale price.
Okay, thank you, Fabienne. Joanna, a few people have asked questions about the property market and trends post-COVID. One of the things we've seen in France and the UK and other countries is this push from the city to the country. And people are buying homes with more space, and especially home offices, because they're all working from home a lot more now. So do you think in France, do you think there's going to be more competition actually from the French looking at these sort of country homes, the rural properties that the Brits kind of like had a free hand at to in recent years because the French haven't been so interested in them? And if that is the case, is it going to push prices up? Will there be fewer properties on the market, especially with vendors being less keen to show people around at the moment? I believe there's a bit of a scarcity of properties anyway. So that's quite a lot of questions there.
Yeah, there's quite a few there. The property market has completely changed, and the French are driving the property market anyway because Brits haven't been able to travel. Those that came before the 31st of December to get in before Brexit, we've got a lot of Brits here renting and looking at properties. The other thing is the property market in France is very, very strong. The interest rates are really low on mortgages, so the French are moving. But they're not just, the French are quite big on having a second home. They might have had one in the family for years that all the family have always used, etc. Particularly particularly in coastal areas. But the other thing is that a lot of the French tended to buy in other countries, like Portugal was very big with the French. Even Miami is very big, and some of the Florida Key countries are very big with French buyers. But since the pandemic, we've seen a lot more French looking for holiday homes in their own country so that they don't have to travel outside of France. You know, France is huge. It's the biggest country in Western Europe. So there's so much variety. You know, you can have coastal on the southwest, you can have south of France, Mediterranean type coast. You've got Alps skiing. You know, there's so much opportunity for the French to have a holiday home in their own country. And because the property market's so strong, where we used to see countryside homes, in particular, take 6 months to a year to sell, you know, we're getting 2 or 3 buyers on the same property, and that's never happened. Not in the, you know, in the 18 years I've been selling properties, I've never seen that happen. And what that is doing, because, for example, even with our own agency, you know, we normally carry a stock of around 15,000 properties. Currently, we're carrying 10,000. So, you know, there's a huge drop because properties are selling quicker and we're not getting as many coming back onto the market. So yeah, if my advice would be, if you are coming to look at a property and you love it, don't hesitate. Don't go back and think, well, we'll think about it in a month and we'll come back next month and have another look. Because if it's a good property at a good price, it will be gone. And what this does do when there's lack of stock, not that there's a huge amount of stock, you know, we've still got hundreds of properties to sell, but it has started to push the countryside property prices up slightly, and we're seeing increases of maybe 3 and 4% across the board in the countryside areas. The cities had already risen, they'd already gone up sort of 7 to 9%, and at the moment they're quite stable. They're not coming down because people will always need to work and live in cities, but what we have noticed, because we have an office in Paris and Nice and some of the major cities in France, that they are looking for outside space or that extra room where they can work from home, because there are a lot of companies that aren't taking people back into the offices. They've realised that, you know, rather than pay these huge rents, people can work from home. And so the demand for the typical British property that we all go for with the lovely countryside views, etc., there is more demand for those. So it has totally changed. I think it's just a much faster market. You can still get what you want. There are still hundreds and thousands of homes to sale, but it has changed. I think the French are moving back into their own country and into the French countryside as well, especially with the trains. You know, the trains, the TGV lines are so fast. From where I am in Angoulême, to drive to Paris would take me 6 hours. It's just under 2 hours on the train. So, you know, people can commute and go home to their country home at the weekend and buy something smaller in the city. So it has made a big difference, the pandemic, to what people are looking at and what people are buying.
Okay, so it's a seller's market. Don't hang around if you see something you like. That's the question. And maybe things will settle off and guess there'll be more properties on the market when people start traveling again and things feel a bit safer. Peter, a tricky question now for you. It's on import duty. There's been a lot of questions and it's quite unclear online about import duty on personal possessions for those moving to France, if they're taking their furniture and so on. What can you tell us about that?
Well, all we can say is really what is currently known, because there is still, I think, some subjectivity yet to be coming out from the French authorities on what the future position might be fully clarified on it. But as a starting point, the basic position is, if somebody's looking at bringing their personal possessions, be it from the UK, even though now the UK is a non-European member state, they can bring their personal possessions to France without import duties being imposed, provided there are 3 conditions met. And those 3 conditions, and I'm going to read it because I got this information only this morning, having asked. First and foremost, that the individual themselves must not have been living permanently in France for the 12 months prior to bringing the possessions. That the actual possessions themselves are actually not older than 6 months old. So you cannot physically bring brand new possessions. If you've got older furniture, older thing, anything that's more than 6 months old, it's again exempt from import duties being imposed. And when you arrive in France, you shouldn't be allowed to, you're not supposed to then sell them or let them within the first 12 months of bringing them. Otherwise, again, they can backtrack it and impose import duty. Now, so what is the key issue there then is actually a number of other areas that potentially are subject to it and will be subject to it. We just indicated one, i.e. brand new possessions that have been purchased, maybe in the UK, just before you brought them to France, will be potentially subject to an import duty on arrival. And again, the values and things on that haven't been yet fully clarified, so we can't be too specific about what level that might be at this point, because there's a full range of people saying from one percentage to another percentage without being specific. So I think it's an area that will become clearer in the coming months. So that's one area. The other things with regards to that, and again, it could be quite important as an aspect, particularly if you've bought maybe a secondary property and you're then looking at wanting to furnish it with new furniture that you might be coming from the UK, it's just to be a bit wary about that potential impact on it. Other things that still may be subject to import duties, irrespective of their age, are then certain other types of collectibles that are deemed to be collector items, antiques that have a value that they might have an ability to impose. Specialist types of jewelry, for example, still come under that list. So again, there's lots of little things that might not fall in the exemption that still might be subject to an import duty. So it is something that is yet to be, I think, 100% clarified and certain, but older possessions, more than 6 months old, and you're bringing them, shouldn't be a problem, but there is some areas that you will need to be care of. What is really, really important as a current point, and it is, of course, when you bring all these possessions to France, you need a full inventory of everything that you've got in every single box. You need to place an approximate value of everything that's in every single box. And you have to provide that at your point of entry with the goods, be it yourself or if you've got a professional company doing the move for you, for and on your behalf, for that to then clear through the entry customs. And that's at that point when they're going to look at things on the list and perhaps make subjective opinion about what they believe may or may not be subject to potential import duties on arrival. And that's about probably as close as best an answer we can give at the current time.
Okay, well, thank you for that, Peter. I know it's all very, it's as clear as mud, really, isn't it, for a lot of people trying to find that information online. So thank you for making it as clear as we can at this moment. Obviously, as more people are moving over, we'll learn more from both real practical situations, and hopefully the guidance will be a bit clearer. But that's really useful. Thank you. Joanna, we haven't got much time for many more questions, but Joanna, the question people always ask us is where they can buy a bargain property in France. And specifically, people have been asking where they can get the best return on their investment in France at the moment. So presumably they mean not just the cheapest areas, but the areas that offer the best value and that maybe are more likely to increase in future. What are your thoughts on that?
Well, thanks to the pandemic, the countryside properties are now starting to go up in value, which they haven't done for many years. Again, it really depends on what you're looking for, because there are bargain properties in every area. You know, a bargain to someone in the Côte d'Azur might be like 600,000 when it's normally 800,000. So it really depends on the area. But, you know, if you research the area really well and you have a very good agent, they will be able to tell you if something's been really well priced. And some things, you know, have dropped dramatically because they really want to sell quickly, and in those situations you can get a really good property at a very low price. It doesn't happen all the time, and at the moment obviously it is a seller's market and there are lots of buyers for each property, but the cheapest areas, I mean, if you're on a really small budget but you want lots of land and lots of property, then I would look in the centre of France, like in the Cruz, the Limousin, those sort of areas whereby you can have a really, really large property and not too much cost. If you're you're looking for, guaranteed areas like the Dordogne, the Charente, the southwest of France, all the way down to the Languedoc, always popular areas from all nationalities, Dutch, Belgian, British, French alike. Coastal areas always hold their money, although they can be slightly more expensive to buy. So yeah, I would say that, there is going to be bargains in all areas. And the best thing to do is do your research and have a look at what your money can buy you in those different areas by going online and having a look at, what properties cost in those certain areas.
Okay, great. Thanks, Joanna. And one final question that somebody has sent in for Peter. Could you just quickly give an overview of what property taxes people can expect to pay in France? So the taxe foncière and d'habitation.
Take off mute. Well, let's start with taxe habitation, because that's quite an interesting one, because it was one of Macron's first major decisions when he became president to, over a period of time, completely phase out taxe habitation for everybody. That has started. It's been a phased basis, and it's been driven by income levels declared on tax returns at the point. So those that had lower earnings had their tax habitation removed and so forth. And it's been building over the last few years. There is still tax habitation being paid by those that have greater earnings, but the aim that the government is saying will be to phase it out completely over time. I think it got stalled slightly last year because of COVID and things, but it will come back to play. Let's be fair. Macron has an election presidential to run next year, and he's going to try to keep as many promises like that in place because he needs the votes for the election. So that one's going to disappear. Now, taxe foncière, putting it in nice and simple terms, is much the same as, the likes of UK property tax. And it is dependent upon lots of factors and will range as a consequence depending upon the property itself, its location, and other services that it's trying to link to it. So it is very difficult to be precise on any one area of taxe foncière, because it's so broad in terms of what the determining factors are. What is commonplace to it is anybody that's paying UK council taxes, property taxes, taxe foncière is generally considerably lower by comparison to what you're used to paying in the UK. So that's generally a good starting point. For the benefit of what you're actually paying for is actually lower than what you would be used to paying in the UK. So that gives you perhaps a good starting base, but it is so wide, and the price range on foncière can be so difficult to actually determine because of the location of the property itself.
Okay, that's great. Thanks, Peter. So we're coming to the end of our webinar. Thank you everyone for joining us. I do hope it's been useful. You can also contact us afterwards with any further questions, and we'll answer the questions you've asked live that we haven't been able to get to as well. We'll respond to you with those questions. Apologies for my sound problems during the webinar. I hope it didn't cause you too many problems. So thanks to my fellow panelists, Peter, Fabienne and Joanna. Thanks also to our sponsor, Blevins Franks. Please do join us for our next webinar, which is on the 25th of May. We'll include the details by email. You can also find out more on the French Property Exhibition's website. And for more information about France and French property, please do visit our website, completefrance.com, and our properties portal, francepropertyshop.com. You can also find information about subscribing to our magazines, French Property News and France Magazine, on our website too. So thanks again to everyone for joining, and thanks to my fellow panelists, and apologies for the sound issues. See you next time.